Hyde Park Savings Bank is changing its name and business strategy. Founded in 1871, the bank has a base in Hyde Park along with branches in West Roxbury, Dedham, Brookline, and Norwood. Bank officials say they're also adding new services, more commercial loans and mortgage loans. The goal is more business throughout the service area, but also more community investment in parts of Boston. Over the past couple of years, the bank has also been going through a change of leadership. Our guest took over last year as President and CEO. We'd like to welcome Bill Parent.
Chris, great to be here.
Thank you very much for being with us, Bill. First of all, we've heard a lot in recent years about commercial banks. We've heard a lot about mortgage companies, a lot of it not very nice. So what are savings banks up to these days?
Well, we like to describe ourselves as a community bank. In the adage of banking, that is somebody who has a relationship with its customers that goes beyond simply providing a single product, but is looked to provide multiple products. That could be deposit services, whether it's CDs, checking accounts, savings accounts, and then also on the lending side, residential lending, small business lending, and even to lower middle market commercial banking, commercial lending opportunities. A full array of relationships. In the old adage, savings banks were simply a place for people to go to give their savings and to maybe have a mortgage loan. I think the organization and the industry has to evolve beyond that and further into a true community bank that has a diversified product array that they can offer their consumers to keep them here, not force them to go to the bigger banks to get these more sophisticated products and services that some of the bigger banks offer.
Now, Hyde Park Savings, when you took over, it was a bank that didn't make many toxic loans, to be sure, but it was also called, I think in Boston Business Journal, I guess a mutual fund that was only disguised as a bank.
Sure. Banks are measured in one way by their loan-to-deposit ratios, and we had one of the lowest loan-deposit ratios, meaning that only a small percentage of our deposits that we took in were actually lent back into the community. The previous model had a very strong aversion to credit risk. And we feel that, again, a community bank, a well-founded community bank, not only takes deposits from their communities, but then lends them back and allows the community to grow and have a vitality to it that it wouldn't have if there wasn't that mutual relationship of taking the deposits in a good business transaction and then reinvesting them locally. So, when I came on, the strategy was diversified. I mean, we've done many good things in our communities over the 140 years that we've been there. But there was an opportunity to expand that even further by bringing that lending capability, both for residential lending. Of course, first-time home buyers are always, programs people like to highlight in getting people into homes that are appropriate for them. And then also small businesses. So everybody talks about the vitality of the economy is driven by small businesses. Obviously, the ability to provide credit where appropriate to small businesses to help them grow, build employment in our communities is one of the things we strive to help.
Now, we have a community bank here that has at least cast aside one community name. And going back to the 1970s, after a neighborhood changes, a bank changes the name. We saw this with Dorchester Savings. People didn't like it. And when your name changed, I understand the mayor didn't like it.
He did not. I think that what's important is we are transforming the institution, and it was important to the communities that we serve and the communities we prospectively hope to serve that they see that transformation. And things change. And ultimately, we felt through research that we did, in order to connect with the transformation that is going on in the institution and the prospective customers, that was the best thing to do. We think that the name is reflective of what you do and who you are in the communities you serve. And we aspire, through some of the programs we put in place in the 15 months I've been CEO and going forward, to be much more connected to the community in that way and be held accountable in that regard. Whether it's, again, accessibility of loans, and lending products to the community, or whether it's a commitment to be a good corporate citizen and invest in the community through charitable contributions. That's where we think one should be judged. And yes, it's unfortunate. I truly respect that we've tugged at a few heartstrings and childhood memories by changing the name, but we felt that it was critical for us to be able to reach out to the market and really express the transformation that we're doing here.
Chris, another way we judge banks is not only by making loans and business loans in their areas, but support for community development projects. Anything to talk about here in the city that your bank's been involved in?
Well, one of the initial things we've did is we've run some first home buyer programs, trying to help educate folks in understanding how to go about and getting that first home ownership, what is the right appropriate level. And I think it's fair to say that we're starting to work with the city on some very defined programs, early stages. We're hopeful that we can get together on and continuing to expand home ownership, especially in multifamily areas where income properties and non-owner occupied properties are starting to become a strong demand. We want to still, and I think the city and with assistance from community banks like ourselves, want to keep that home ownership in these multifamilies, and there's some opportunities that we're working with there in helping out first-time home buyers or homeowners who want to be in a multifamily type of property that we can work together with the city and place them.
So it sounds like you're offering some education, but I guess the bank would be gaining some outreach from that as well, right? You're introducing yourself to people who might
Sure,
yeah.
Absolutely, and that's part of the new brand, the new activities that we want to solidify in the marketplace, is to have people understand we are available to them as an opportunity to borrow funds at different points in their life. And also with the small business side. So sure, yeah, there is two sides to that, and we see great benefits, but we also see the benefits to the community for us.
But you know, it is unusual to hear a bank talk about investing, because these are not great times generally for investing. There are new regulations out there, and there are just new things, even shortages of demand that make investment hard to come across. Do you worry about that?
Yeah, I mean, I think all us bankers worry about that, and worry about being disciplined and finding the right match. You know, there's somewhat of a misnomer that banks aren't willing to lend. They are willing to lend. We are, our competitors are willing to lend. What is difficult is finding that right match with a borrower, be it a consumer or a business, that is prepared to accept the burdens of borrowing money and being able to meet the expectations of it. So, you know, that is always a challenge in trying to find that right relationship that is beneficial for them as the consumer and us as the credit provider, because it really needs to work for both parties. We just came through a period where, you know, you had this infusion of credit availability. You had consumers get out over their skis, so to speak, in extending themselves with debt that they could not handle. And when the market blew up, there were a lot of casualties and unfortunate situations. It's our responsibility to make sure that doesn't happen. It's our responsibility to managing our bank. It's also a social contract we have with our consumer on the other side to protect them from getting over their heads too.
Of course, we should mention the name. The new name now is.
Oh, it's Blue Hills Bank, and we like Blue Hills. We did a pretty in-depth market study. What we liked about Blue Hills, it had connectivity with the area that we cover today. You know, our branch network stretches from Hyde Park through West Roxbury, Brookline, out into Dedham and Norwood. So the Blue Hills area is very strongly connected with that area. Plus, it also provided some aspirational growth coverage to us too. You know, we are just under $1 billion bank. We're extremely well capitalized, one of the best capitalized banks in the state, and we have aspirations for growth. And you know, with that, we think that the name actually works in a broader geography than even we have today.
And you can see it from much of Hyde Park. Thanks very much for being with us, Bill Parent of Blue Hill Bank.
Great to be here, Chris.
We'll have more news in just a moment.